Good morning. My name's Ryan Littlestone from forexflow.live. We're going to go this week with a familiar chart that we've been looking at for the last few weeks, and that's euro dollar. What we've been looking at is playing this 110 to 112 range, which we've been trading for the last nearly 2 weeks now. And what we saw last week is that the price ran higher from the 110 area all the way up to pretty much close to the 111 area. Now, as we can see from the 4-hour chart on the screen there, what we've got is this range between 110 and 112, and now what we've got in the middle is this 111 area. Now, I was going long into the 110.10, 110.05 area, and I was cutting some of that long up as we approached this 111 area. The highest level I took some profit on was 110.85, and then I had a trailing stop coming up behind it, which got triggered on a dip to 110.55. So as we do with these trades, what we have to look for is where the price is going to struggle. There's no good getting into a trade and thinking, yeah, I want to make 200-300 pips in it. You can't ignore what the price action tells you. And for the last week, latter part of last week, we saw that the 111 area became the sticky point. It was pretty much between 110.80, 110.90, that sort of range. So with that in mind, you have to look at what the market's telling you, what the price action is telling you, and that told me take some more profit up into this 111 area, see what happens with the price, keep my trailing stop pretty close behind. So if we do fall back down, you're not going to give all your profit back, you're not going to give all your margin back. And that's what happened. I managed to take near the top, and then we saw the trailer hit. Now where we are today, we're right back down testing that 110 area. We've had a low of 110.10 so far. And we're going to be seeing whether it's time to go again and maybe get back into longs. And that's what I'm looking at now. But I'm going to be a little more cautious because we've come back here pretty quickly. So now we're looking at this double range, if you like, a range within a range between 110 and 111. Again, I'll be looking for a break of this 110 area, potentially 109.80. That'll be the key line in the sand. If we get below that, that's when I'm going to potentially look to reverse this long into a short and go with the break, because what I don't like is I don't like a level being tested too often. The more times the level gets tested, the bit greater the chances it's going to break. So I'm going to be watching this with a bit more caution than I was last time. So what could be the trigger this week? Well, we're seeing the dollar strengthen pretty much across the board. We're getting more positivity about trade talks with China between the US. That's putting a little pressure on the euro via strength in the dollar. So later on this week, we've got some big data out of Eurozone from the inflation numbers. It's suggested that inflation is going to be coming up on the upside and potentially pushing higher towards the 1% area. That's going to be a boost to Eurozone because it's going to detract from the expectations of a dovish ECB. So that's what I'm going to look at towards the end of this week regarding the data. A lot to go. That's not until Friday, so who knows what can happen until then. In the meantime, we're testing this 110 area. We are approaching also the next ECB meeting where we've got Lagarde in a first ever ECB meeting. The market's going to be a little touchy about what she might say and setting out her stance as a policymaker now. So that's the risks on the calendar and the fundamentals going into this week for the euro. But what we can do is watch the price, and I'll be watching this 110 area very closely with the view of going long, and as I say, reversing into a short if it looks like we're going to have a break on the cards. Lots to look at. I wish you well for this week, and good luck.